Hi, it's Lee, and welcome to the Tesla Economist. Look, firstly, I should say that I don't really doubt that Tesla will achieve high volume production for the 4680 cells, but I've been so excited about these for so long, it is difficult to remain being patient. So I thought that perhaps to alleviate some of said patience, we could see what the company would be like if the 4680s didn't end up solving the dry battery electrode process. Firstly, let's paint the scenario. For Tesla to have a successful future does not solely depend on the 4680 cell, or I should say the dry battery electrode process for the cathode, as that is pretty much what we are down to. Tesla can still use 4680 cells. Panasonic are already working on them, and they're using the wet slurry technique still, although they do have the tabless design, so they are just a more expensive, slower to produce cell than Tesla's dream 4680 version. They are still, however, an improvement on the 2170 cell, all else being equal. And if this is the case, then perhaps Tesla would likely end up making their cathode on site in Texas with the more traditional, slower, more expensive, less environmentally friendly methods, and still, in effect, making 4680 cells, of which are likely imperative for the Cybertruck, as they will require structural battery packs. Whereas the Texas Model Y, well, we know that they can make them just fine with 2170 cells. Anyway, this 4680 issue would come to a shock to us retail investors, but I'm not too sure the market would even care that much. Perhaps the stock might only drop 10%, or maybe 20% at most on such news like this. Why? Because the potential of the 4680s are not close to priced in enough to the market. They mean Tesla can make cells at 10 times the speed. How is that not a massive deal? And the more cells Tesla can make, the more very highly profitable vehicles they can make too, at 10 times the pace, and with higher margins. Highly underrated, just like FSD. Very little of the stock price has factored in FSD either. Alright, so the market will react, and Tesla will have to realign their efforts, and the company will not be able to grow at the 4680 pace. So let's just move forward a few years, up to perhaps around the end of 2024. By then, Tesla pretty much have enough cells for an annual run rate of about 4 million vehicles a year, with thanks to all their current cell suppliers. If they start making more 4680 cells, along with Panasonic's help too, who I would say will go all in on 4680s themselves, then that will all help. But the majority of their cells are likely going to be China's LFP. China are far from slowing down on their cell production either, and Tesla just make them so profitable for everyone involved. So we fast forward to sometime in 2024 and take a cross-section of the company when Tesla are at an annual run rate of 4 million, which I think is still a possibility. Even if it's 2025, then we're still just off by a year, especially considering we have already built 2 large factories that have barely gotten started. In fact, I often do estimates for run rates or profits for future years, and they always look so good, but almost unbelievable. But worst case scenario, if you want to be bearish, you can just add an extra year or 2 onto my numbers, and they still look really good. Like I say, if you triple your investment in 2 years or 5 years, then you're doing outstanding, at least in real terms. Nominal, maybe not so much, if inflation gets out of control. So due to the fact that LFP will be the majority of cells being used in lieu of the 4680 potential, then that will reduce ASPs. It will possibly also mean that Tesla are not able to use structural battery packs unless CATL start making LFP 4680s. But 4680 cells are not a simple cell in manufacturing for many other ways. Tabless designs were not easy either, but I guess there is a possibility that Tesla could work with CATL to help them perhaps. In fact, it may be more the M3P cell they want to work together on, and perhaps are able to get a bit more range, efficiency and weight saving from CATL's ternary iron phosphate cell, and thus also add a mid-range Model Y, which would help boost ASPs slightly when compared to the standard range. However, we're also going to be seeing a lot more units for sale, which would possibly mean slight price reductions to serve that much more demand, especially when we don't have as much of the 4680 magic coming from these vehicles. I'm also not factoring in FSD or robotaxis into this model, even if we're talking about 2025. I keep saying, if Tesla hit that, then it's a lottery ticket anyway, and it blows all other valuations out of the water. I actually want to get around to robotaxi valuations sometime soon, but too much else to discuss lately. Like I say, it would just blow everything else out of the water and tower over the rest of the auto business, so it may as well be left separate. So we'll just keep FSD where it is more or less today. I think demand for EVs and Tesla will continue to rise anyway, possibly organically at the same rate as Tesla can make them, especially if they drop the prices somewhat. We'll add this mid-range Model Y for sale in the US too, but we will not be adding any more models to the lineup. I think these models alone can serve the 4 million a year sales. This would include a Model 3 ramp and a Cybertruck, but we will not include the Robotaxi or Semi-Truck or Roadster. I'm going to try and use 2.5 Model Ys, 1 million Model 3s, 100,000 Model S and Xs, and 500,000 Cybertrucks. We're also going to do this without building any more factories, with the exception of the expansion of one more factory in Shanghai. With that, we can plug in some numbers into the spreadsheet to further illustrate what we're talking about here. We'll just summarize it into one quarter that has the run rate of 4 million a year, i.e. 1 million for the quarter. Okay, actually, when I put the numbers in, it comes to 1.1 million, deciding on where and how to best fit and allocate each model at each factory. And as we decided that no new factories would be built, or even the current ones extended, aside from the new Shanghai facility, well, I also didn't end up adding production to the Model 3 by that much either. Now, to calculate the ASPs, for Fremont, I believe S and X will still fetch their current price tags, as they'll be highly sought after and limited in production. Model 3 will also be limited in production and still have this tax credit in the US, but let's not bank on that either. In case you couldn't tell, this is somewhat of a worst case scenario for Tesla, aside from excluding potential black swan events and assuming that the entire global economy and civilization has remained intact. I'm going to lower the ASP for the Model Y in Fremont and assume that perhaps they have moved over to a mid-range version with some iron phosphate variant cathode. For Shanghai, we will roughly maintain the same Model 3 price, but lower the Model Y price, due to more demand perhaps required, since production is ramped up. Although, like I say, I do expect organic growth to match that also. I'll also set Berlin at a similar ASP, due to the factory ramping up rear-wheel drive standard or mid-range variants, and no 4680 long-range version. The Texas Model Y will be long-range variant and a 4680 version with structural pack that doesn't use all the dry battery electrode processes. And I'm reducing the ASP to $60,000, which I would say would still have plenty of demand, if it is the only long-range Model Y. But I give the Cybertruck an ASP of $75,000 due to it being limited in production and such a desirable vehicle. This equates to over $60 billion in revenue when we include some FSD revenue at today's rates. I've used somewhat conservative margins, but remember, we should also consider that Tesla will obviously be working continually on getting costs down, and we know how good they are at that, generating an overall ASP of $53,000 per vehicle with a gross margin of 37%, generating a gross profit of $22 billion. If you think the margins are high, it's due to the Cybertruck. If we remove that, then they come down to 35%. And I'm deleting regulatory credits. And it's not all doom and gloom, as Tesla will also have been able to expand their energy business, and actually generating a positive gross margin too. On top of that, due to all the production not being as exponential and so many more Teslas on the road, then their services business will also be doing a bit better, giving us a total gross profit of $25 billion. R&D should barely even be counted if we aren't including FSD, but I have actually increased it up to $1 billion anyway, and upped SG&A a bit too, resulting in over $22 billion in operating profit, which out of interest would be a 33% operating margin, which is not too bad. Remember, this is based on lower ASPs due to not fulfilling enough high-end longer-range vehicles, and higher costs due to not achieving the 4680 dry battery electrode process that we all hope does happen. But as the numbers increase, the operating margin does too, which I've often tried to get through to everyone and try to explain why all the competition are struggling so much, especially when companies like Rivian already have OPEX about the same as Tesla, yet delivering a tiny fraction of Tesla's numbers. No offense intended to Rivian, they've made an excellent EV. They truly get what is required more than most, especially all legacy autos. They just need to cut back on their OPEX a lot. This then equates to just over $20 billion in net profit, or $6.50 EPS, or almost $20 EPS pre-split. So there you go. What do you think of that? Well, how about we go into further analysis of what that means? Now, as you know, I'm not a big fan of the trailing 12-month PE ratio when it comes to valuing a company like Tesla that makes such enormous exponential leaps in production, sales, and profits. So I'll take that number and give you what I think might be a fair market valuation to give some idea of stock price. And we'll use a number for where the economy tends to be for the majority of the time in markets, i.e. not during a boom or bust period. So I'm going to annualize that income, and it comes to $80 billion, and then we need to assign a PE ratio of which I've decided will be 25. Now, before you all comment and tell me I'm crazy, this could be a more saturated market for Tesla now, as they're not able to grow as much at such a rapid rate. Equally, there'll be others that are able to grow at similar rates, albeit likely inferior cars, but there will be more out there. Tesla won't be able to gain market share as fast if they can't produce their 4680 sales, and they'll struggle to hit 20 million by the end of the decade. In fact, 10 million may even be a push. But also bear in mind, this is Tesla not building any more factories by this time as well. I mean, a lot of things might have gone wrong for us to end up in this scenario. And like I said, we've discounted FSD and robotaxis too. The good news is that we still end up with a valuation of $2 trillion, which is basically double our money from today in what may be about 3 years' time. If you ask me, doubling my money in 3 years' time is still an exceptional return. I know we talk about so many exciting things that this company may achieve, like robotaxis or even bots. It's easy to get ahead of ourselves and start looking at 10 times our money, and I'm certainly not saying that that isn't a possibility. In fact, I'm not saying what we have discussed here is even a likely possibility. I think that it's likely that Tesla do hit high volume production for the 4680 before Q2 next year, hopefully well before. But just if Tesla don't achieve the 4680 and have to pivot, it doesn't mean the company is over. There are plenty of safety nets here that are so highly profitable. I tend to say that Tesla have bet the company on the 4680, and for the large part they have, but they didn't bet all of it on that, as in it's not do or die, unlike when they did the Model 3. The purpose of this analysis was more just to reduce your stress and anxiety about what happens if Tesla don't hit 4680s. Then your investment is still in good hands. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.